Welcome back to the Deep Dive, your shortcut to being genuinely well-informed. Today, we're diving into the healthcare sector, specifically a company that's making some serious waves, Yatharth Hospital and Trauma Care Services Ltd.
Yeah, they're definitely one to watch. Not just growing, but really surging.
Exactly. So our mission today is to unpack their latest earnings call, that's Q1 FY26, really get under the hood of their strategy, what's driving this incredible success, their future plans, and of course, the key risks they need to manage.
Right, because it's easy to just see the big numbers, the growth percentages.
Mm-hmm.
But we want to understand the why. What does it actually mean?
Right.
What are the implications for their business segments, the broader industry outlook, their growth plans going forward, and how they're thinking strategically?
Okay, so let's kick things off with those headline figures. Highest ever revenue and profitability for Q1 FY26. When we hear stellar performance in healthcare, what does that really mean? It's not always the fastest moving sector, is it?
No, it isn't. And stellar here means, well, pretty exceptional. Revenue didn't just nudge up, it jumped 22% compared to the same quarter last year.
22%. Okay.
And the net profit, that surged by 38% year on year. That's significant. It tells you they're not just bringing more money in the door, they're becoming much more efficient at turning that revenue into actual profit.
Those are seriously strong numbers.
They really are. And one of the key highlights, I think, is the Greater Faridabad facility.
The new one, right.
That's the one. It turned net profit positive within just 1 year of starting operations.
Wow, 1 year. That's quick for a hospital.
Extremely quick.
Yeah.
It suggests they've got a pretty effective playbook for rolling out new facilities, and it's already contributing meaningfully about 9% of their total revenue this quarter, 234 million rupees.
Okay.
And it's not just financials. Look at patient volumes. Inpatients up 27% year on year, outpatients up 20%.
Yeah.
So more people are choosing them. Plus, their average revenue per occupied bed, ARPO,
Yeah, how much they make per bed, essentially.
Exactly. That increased by 6% year on year, reaching just over 32,000 for the quarter. And that's driven by a deliberate focus on super specialty services, the more complex, higher value treatments.
That really is remarkable, especially hitting profitability so fast in Faridabad and contributing almost a tenth of revenue already. Well, what's underneath that? What are the strategic moves, the operational tweaks driving this kind of growth? It can't just be luck, surely.
No, absolutely not luck. It boils down to a few key things. First, as I mentioned, that constant push towards super specialties. Think complex cardiology, oncology, neurosciences. These command higher prices, higher ARPO.
Right.
Second, it's just, well, operational excellence. They're clearly getting better at managing patient flow, bed occupancy, and just running the hospitals efficiently day to day.
Okay.
And you see this reflected in their existing assets too. Like Jhansi Hospital saw a massive 63% year-on-year revenue increase.
63%.
Yeah. It now contributes 7% of their total revenue. So they're getting more out of what they already have, not just relying on new builds. And underpinning all this is their very healthy balance sheet.
Ah, the financials.
Yeah, around 300 crore rupees in net cash, and importantly, zero debt. That gives them tremendous flexibility for what comes next. Oh, and they also sorted out a land issue at Jhansi, which just clears the decks and ensures smooth operations there. It all points to a really solid foundation.
That strong financial base and the proven success in Faridabad must be giving them a lot of confidence. So, okay, let's pivot. This is where it gets really interesting, the future. What are the big expansion plans on the horizon? How are they planning to accelerate this growth even further?
Right. This is where their ambition really shows. They have 2 major new hospitals coming online very soon. First, a 300-bed facility in New Delhi. That was actually inaugurated mid-July 2025, so they expect revenue starting from August.
Okay, already starting.
Yep. And then a larger 400-bed facility in Faridabad, scheduled to open late August 2025, with revenue kicking in from Q2 FY26.
So that's 700 new beds coming online almost immediately.
Exactly. A significant jump in capacity.
Yeah.
And crucially, it's not just about adding beds. These are high-tech facilities. We're talking robotic surgery equipment, advanced diagnostics.
State of the art.
Pretty much. And they're strategically bringing in top talent leading super specialists.
Right.
Like they're setting up the first dedicated pediatric cardiology team in the whole Noida region. That's a big deal.
That definitely attracts patients.
It does. And they expect these new places to command higher ARPO too, maybe around RSAS 38,000, which is, quite a bit higher than their current average. And they're using that Faridabad playbook again, aiming for profitability in about 15 months.
15 months again. Seems to be their target.
It seems to be, yeah. Shows confidence in their model. They also mentioned tackling competitive markets like Delhi by bringing in star doctors from rivals, creating more of a boutique hospital culture, focusing on that personalized patient experience.
So it's a clear strategy. Prime locations, advanced tech, top doctors. What about growing within their existing hospitals? Or are they looking at buying other hospitals too? Acquisitions?
Yes, good question. It's definitely a multi-pronged approach.
Yeah.
They're planning what's called brownfield expansion, adding beds to existing sites. So 200 more beds at Greater Noida Hospital and 250 more at Noida Extension. They'll take about 2 years to get operational.
Okay, leveraging what they have.
Precisely. And then there's inorganic growth. They're actively looking for at least one acquisition this year. Could be land for a new project or maybe a stressed asset, an existing hospital they think they can turn around.
Right.
They're aiming to add around 350 beds through that route with a budget of roughly 300 crore rupees. So add it all up, greenfield, brownfield acquisitions they're expecting to blow past their original target of 3,000 beds by FY28. They're talking about adding maybe 1,200 beds in the next 3 years alone.
Wow, 1,200 beds in 3 years. That is aggressive. It really paints a picture of a company firing on all cylinders, new builds, upgrades, acquisitions, a very comprehensive growth plan.
Absolutely. Very dynamic.
So we've talked about the physical expansion, the where. Let's zoom in on the what. What specific medical areas, which business segments are they really banking on to drive this growth? And how does the international picture fit in?
Right. The clinical focus is key. It aligns with that push for higher ARPO we discussed. They're constantly refining their case mix and pay mix.
Case mix being the types of treatments, pay mix being who pays.
Exactly. They want more complex cases and ideally more patients paying through private insurance or cash, which tend to have better returns than, say, some government schemes. Oncology is a huge focus area for them.
Cancer care.
Yes. Chemo, radiation, surgical oncology, bone marrow transplants. That whole business segment has grown 50% year on year. 50%.
That's massive growth in a specific segment.
It is. It's close to 10% of their total revenue now, and they see that climbing to around 15% in the next couple of years, especially as the new hospitals will also have radiation oncology capabilities.
Okay.
Of course, they're still strong in cardiology, orthopedics, neurosciences. Those core super specialties remain vital. But it's interesting, they also highlighted internal medicine.
Basic diagnostics and treatment.
Yeah, because it acts as a crucial feeder. Patients often come in through internal medicine and are then referred to the super specialists. So while the high-end stuff grows, they need to maintain internal medicine's contribution, aiming for around 15–17% to keep that ecosystem healthy.
That makes sense. A balanced approach within the specialty focus. Now, what about looking outwards? You mentioned medical value travel, MVT. How are they actually attracting international patients, and how big a piece of the puzzle is that?
They're putting quite a bit of effort into MVT. They've got partnerships set up, for instance, with the Children's Heart Fund, and interestingly, Black Lion Hospital in Ethiopia. That's the largest government hospital there specifically for patient transfers.
So formal channels bringing patients in.
Right. They're not just waiting for them to show up. They've also done outreach, like a medical education program on IVF in Mauritius, combined with patient screenings there. And they're setting up physical presence, too, preparing an information center in Baghdad, Iraq.
Baghdad, okay.
And working on a representative office in Tashkent, Uzbekistan, which they see as a hub for Central Asia, I think Tajikistan, Turkmenistan, Kazakhstan as well.
So really building a network.
Yeah, strategically building that network. The expectation is this will become a significant driver, maybe pushing international patients into double-digit percentages of their pay mix within a few years.
Yeah.
And importantly, they don't expect this to hurt their margins.
Why not? Wouldn't there be costs?
Well, the argument is that the main costs, the high-end equipment, the specialist doctors, are already in place for their domestic super specialty focus. So bringing in international patients helps optimize the use of those existing expensive assets. It's an efficient way to grow.
Got it. So leveraging existing capabilities for a wider audience. We've seen the clinical focus, the international push, really thinking broadly.
Definitely.
Okay. But no growth story is without challenges. This kind of aggressive expansion must come with risks. What are the potential bumps in the road for Yatharth, and how are they planning to navigate them while keeping their finances healthy?
That's a critical point.
Yeah.
And they seem quite aware of the potential challenges. Firstly, those big new hospitals in Delhi and Faridabad, they will initially drag down the overall EBITDA margin slightly compared to the previous quarter, Q4 FY25. That's just the reality of startup costs before patient volumes ramp up fully.
Expected, but still a drag.
Exactly. But they're forecasting the overall margin for the full year FY26 to be around 24%, similar to Q4 FY25. The thinking is that the greater Faridabad hospital becoming profitable will help offset the initial drag from the brand new ones. And again, they expect those new ones to break even in about 15 months.
Okay, so a managed temporary impact. What else?
Employee costs are up. That's mainly because they've been hiring these expensive super specialist doctors for the new facilities
Yeah.
and the specialty drive.
Makes sense. You need the talent.
You do.
Yeah.
But they expect this cost to normalize back towards the industry average, maybe 15–18% of sales, as the new hospitals mature and revenue grows. Another area is occupancy and that pay mix we talked about.
Right. Getting the right patients in the beds.
Yeah. Occupancy in some existing hospitals like Greater Noida and Noida Extension has been around 60–65%. They say this is partly deliberate. They've been trying to sanitize the pay mix,
Sanitize, meaning.
meaning actively reducing the proportion of business from government schemes, which might pay less or slower, and focusing more on patients paying cash or with private insurance.
Hmm.
So lower occupancy might be a short-term trade-off for a more profitable patient mix long-term. The goal is to get occupancy in their mature NCR hospitals up to 75–80%.
And how do they plan to do that?
By adding more star doctors, introducing new high-demand treatments like transplants and radiation oncology, and of course, that growing international patient flow we discussed.
Okay. What about getting paid? Any issues there?
Trade receivables, the money owed to them, were sitting at around 123 days worth of revenue at the end of FY25. That's a bit high.
Yeah, 4 months.
Right. But they're actively working on it, aiming to get it down closer to 118 days quite soon. Better cash conversion, currently around 68%, is a key focus, and reducing the government business share should help speed up payments too.
Any other potential clouds? Tax things? Governance?
They mentioned an income tax investigation for a subsidiary, but said it's mostly done with only a minuscule demand. The rest is expected to wrap up by the end of the calendar year, again with a very small amount anticipated. On governance, they highlighted bringing in reputable firms MSKA and Associates, part of BDO, as statutory auditors, and Deloitte as internal auditors, signaling a commitment there.
And financially, they still have that cushion.
Absolutely. Yeah. That strong net cash position, zero debt.
Yeah.
Their big capex plan, 1,400 to 1,500 crore rupees over 3 years. They plan to fund mainly through internal profits, maybe taking on some debt later if needed, but they have options.
Okay, so they're acknowledging the risks, margin pressure, costs, receivables, but seem to have clear plans to manage them. So putting it all together, this ambitious expansion, the specialty focus, managing the risks, how does this position them for the long haul? Is that 30% revenue growth target really sustainable?
Look, 30% sustained growth is always ambitious in any sector.
Huh.
But based on this deep dive, they're putting the building blocks in place. They're projecting continued ARPO growth of 8–10% annually, driven by that super specialty focus. Their future greenfield projects will target bigger cities, NCR, and state capitals, where paying capacity is generally higher rather than smaller Tier 3 cities. And they see their existing hospitals reaching a healthy 75% group occupancy within a couple of years. So while ambitious, the strategy seems coherent. They're not just expanding, they're strategically targeting higher value markets and services while keeping a close eye on operational efficiency and financial health. It suggests a well-thought-out plan for long-term, sustainable value creation, aiming for leadership in their key regions.
This deep dive really gives you a comprehensive view, doesn't it? How Yatharth isn't just growing fast, but actively steering through the complexities, managing those key risks with what looks like real strategic foresight.
Yeah, commitment to sustainable value.
Yeah. So we've journeyed through Yatharth Hospital and Trauma Care Services' impressive Q1, unpacked their big plans for new hospitals and acquisitions, seen their sharp focus on high-end specialties and international reach, and looked at how they're tackling the risks head-on. It's quite the snapshot of a dynamic player really shaping the industry outlook in North India.
Absolutely. It highlights a company that's not just adding beds, but really strategically positioning itself. They seem to have a clear grasp of market needs, patient demands, and, crucially, the importance of operational efficiency and keeping the finances solid. It's a compelling case study in growth within this complex healthcare landscape.
Indeed. And it leaves you thinking, with this rapid expansion and intense focus on specific super specialties, what does this signal for the future of specialized healthcare delivery in North India more broadly? How might this aggressive strategy influence what other major hospital chains in the region do next? Something for you to ponder. We hope this deep dive gave you some valuable insights. What stood out most to you about their growth plans and risk management? Let us know.